this business about Goldbach levels.
In this Goldbach teaching, I'm going to explain a model that you can use for your own trading. Now this is Algo 2, and I'm using Michael's trade from yesterday, I believe, to show you how you could have had a very similar entry to Michael. And the purpose of this video is not to prove that ICT uses Goldbach, because ICT has said very many times that he does not use Goldbach. It is nothing to do with his personal algorithm. And ICT has also said that the pricing algorithm that runs for all markets does not use Goldbach. But what I ask you to do is to have a look at how I explain price and how I explain Goldbach principles, and then make up your own mind on whether price action is obeying Goldbach or not. So make up your own mind. It's time for you to choose the blue pill or the red pill. Right? Maybe you've been lied to your whole lives, and you're finally having a peek through the looking glass. So come dive down the rabbit hole with me. Now, before we start, I just want to quickly make a public service announcement. It's been brought to my attention, and I posted on my Twitter, that there are a number of fake groups who are claiming to be me. So this is one on Telegram, I believe, that has nearly 1,000 subscribers, and I think it's some kind of paid signal service, and they're pretending to be me. It's definitely not me. So if you search here, Aircam Trader, I think this is Telegram, someone sent it to me, there's a bunch of accounts that pretend to be me. The only places you can find me are my official YouTube channel and also on Hoppy's Discord. Okay, if you find a message from me that's not on my official YouTube or on Hoppy's Discord or not on my Twitter, then it's not from me. So please don't be signing up to these signal services where they pretend to be me. Now, this is the trade that ICT took yesterday. So I'm going to break down the price action, and then I'm going to leave it to you to decide whether you think price action obeys Goldbach or not. Make up your own minds. So this is the S&P, and I've screenshotted Michael's trade. So it's around 9:30. He entered at 4793 and a quarter. Okay, and his stop, I think it was here. Okay, and what he was targeting, there was some minor buy-side liquidity that he pointed out, and there were some 15-minute relatively equal highs. So this is the minor buy-side liquidity. I'll show you exactly why he wanted this high and not any of these highs. And here are the relatively equal highs. Okay, and he was executing on the 1 minute time frame. If you're brand new to the channel, bear with me, a lot of these concepts will be super alien, but you can reproduce this analysis. So let's open up the indicator first. The indicator is called DMN's ICT AMD Goldbach. Let's remove the things we don't need. AMD boxes and GB time. I need to fix, let's put the stats box on so you guys can see that. And let me place my labels in white. Now, for the purposes of this trade, it was executed using the 9 power of 3. And I'll show you how I know that. There's the 9. And it was a half shift. Okay, so everything is lined up. Okay, now let's make some observations. So a quick refresher on Goldbach. These lines are determined by mathematics, specifically the power of 3 numbers using the Tesla vortex and the Goldbach numbers. When price is anywhere between the low and the high, so these are the dealing ranges that are predicted by Goldbach. When price is anywhere between the low and the high, this will be the low, this will be the high, and then Goldbach will tell you where the premium discount arrays will form. So this will be the order block, fair value gap, liquidity void, breaker block, equilibrium, all the way up to the bearish order block and the high of the dealing range. This is an extension. So let's make some observations first. Let's start playing price through slowly. Okay. So Goldbach predicts that the order block, this will be the top of the order block, and the rejection block will start here. This down close candle is your bullish order block. I'll just mark out the order block level. So the order block GB level is here. This is your order block. Okay. So we predict an order block here. Let me just hide this for now. There is your order block. This is your rejection block. See how it lines up? That's your rejection block, and that's the wick of the rejection candle that went into the extension and was rejected. Okay. We expect a fair value gap to form within this level. There is your fair value gap. Now, entry model, Algo 2 goes rejection block. Normally the breaker block, you enter at the fair value gap. So what do? We have our long entry here. We can have our stop at the lows. What are we going to target? Let's target the first piece of liquidity in the premium of the range. How do we know that? Again, this is the dealing range low. This is the dealing range high. This is equilibrium. We want to be buying in a discount, selling in a premium. Where is the first opportunity to exit in a premium? It is this liquidity. And what did ICT call this? He called this your minor buy-side liquidity. The question is, why wasn't any of this minor buy-side liquidity? Because these were all in the discount of the range. This is the first opportunity to take a partial in the premium of the range. So this could be our TP1. Where would you logically expect to exit? You can try to aim for the high of the dealing range. Do you see how this piece of liquidity matches the high of the dealing range exactly? Price label 4801.5, 4801.25. Let's make sure that's right. There we go, 4801.5. The midpoint of the rejection block is the quarter. Let me zoom in. There you go. There's your high. This is the bottom of the fair value gap. 4793.5. This is the bottom of the Goldbach fair value gap partition. The exact same number. Which is also the top of the order block range. Let's play price through. We were tapped in. Now, let's get our prices shot away. Let's bring our dealing range back down. So when price was here, we could see what was happening. What value did it respect? Exactly the bottom of the fair value Goldbach partition. Is that a coincidence? Here is your liquidity void within the liquidity void GB level. And we shot off. Now there's your minor buy side liquidity that was taken. The first opportunity to take a partial in the premium of the range. This is why Michael did not use any of these as minor buy side liquidity. So you could have taken this trade off here at the high, or you could have taken it off at the logical termination of the Algo 2, which goes rejection block, normally breaker block, fair value gap, opposite order block, so bearish order block. So you could have taken off here, which would have been a 1 to 3.3 trade. Let's have a look at price action. See that rejection off of the extension? Exact. These are the relative equal highs that Michael targeted. There we go. And then we bounced off of the bottom of the extension, which would now be, because now we are above the high of the previous dealing range. So the next dealing range will be from here upwards. So this old high would now be the low of the next dealing range. So because I'd stuck price there, it's not moving with me. Now it will move with me. And look at what we have here. The top of the previous dealing range's extension is also the bottom of the current dealing range's fair value gap GB level. And there's a TP. Okay. From what you've seen today, let's bring price back down so you can see how the trade started. From what you have seen today, does it look like price respects Goldbach principles as I've taught them today and as I have demonstrated to you over the last 100 videos? If you believe the answer may be yes, would you like to be able to trade like this? Because in Michael's video, he did not tell you how to trade this. Right? There was no real explanation as to why this minor buy-side liquidity was the target. There was no real explanation as to why he came in at this level. Now, there's two ways to come into a trade. You can either come in at the order block, which is what he did, or you can come in as a fair value gap trade. Right. We have 2 trading plans within the book. Well, we have 9 trading plans in the book, and we have 2 algorithms. Algorithm 1 is an order block model. Algorithm 2 is a fair value gap model. Explosive moves normally happen when it's Algo 1, which is the order block model. But you also had an entry using Algo 2. So if you would like to be able to trade like this, and Michael is never going to teach you this because he does not teach Enigma, you can find a link to the copy of the official Goldbach book in the description to this video. All I do is provide example after example of Hoppy's work in practice. Over 100 videos so far showing you how price respects Goldbach levels and Goldbach principles. Just because Agent Smith is saying Goldbach isn't real doesn't mean price does not respect it. You will see so many examples if you just look at the charts of how precise Goldbach is. It's not random. Okay? The rejection block wick, the order block, the fair value gap, bouncing off the extension. It's all there. If you would like me to make any more videos, or if you have any comments, feel free to let me know below.